Hi, this is Brian Shepard from the floor of the CME Group. Today is Monday. In the overnight session we had some news coming out. One of them, which I haven't gotten around to reading yet, but there was 27 people who signed a letter going to Bernanke saying to stop with the QE2 stuff. You know, we've got the overseas mess still going on. It's front page news every day now for the last week and a half. Where all that pans out, only time will tell. But it seems like they've been able to put that in the back burner for right now. We've also had a few mergers and acquisitions announced this morning on Mutual Fund Monday. We also have the middle of the month markup that we like to talk about. The S&Ps did open up 6 handles higher and took out Globex high in the process. Following that, the S&P lost its footing really at 1203 area, peaking out and pulled back approximately 6 handles. You know, and that was about 2 handles above previous close at the 95.5 area. You know, from this point out, it looks to me that the 1103 to 11, all the way up to 1108 is going to be sluggish trade. And if I had to tighten that down, I could probably go from 1104 to 1107. On the downside, we still look for you know, the support in that 93 to 87 if you want a bigger, a wider level. But right now there's really light trade happening, and we're going to cut off to George Cavaligos. He's going to talk about some bond news. Have a good day.
Hey, good morning. George Cavaligos from the floor of the CME Group. Another really rocking day. Started last night, big selling of 5-year notes out of Asia. We're not sure if it was Japanese or the rumored Chinese selling. Personally, I'm inclined to believe it was Japanese selling. The JGB markets, interest rates there are going up too. We saw that right into our opening here. My email went out right on the opening, and the 10-year was trading right around the 126 even level, which is the lows from October. That was, I'm sorry, 125 even. Excuse me, these handles are changing so fast. 125 even to 02, those were the lows from October. Right on the opening, we opened up there and we launched right into some sell stops. Just so you know, guys, there's a phenomenon here that we try to play off of where some participants don't put their stops in the market overnight. They only trade during the pit hours for some reason, probably because of more liquidity. So there always seems to be an accentuated move on the opening. I know Danny and Brian talk about a sort of reversal opening move quite frequently too. And we try to fade those moves. I thought about covering some shorts there, but I didn't. I'm getting greedy here a little bit. I don't have a big position on right now, but a small one. We are looking for some lower prices, but the market's bouncing pretty nicely right now. The Fed is undergoing the QE2 buyback process here. Remember, every day they're in buying. They just bought $7.9 billion of 6 to 7 year notes. Market's rallying on that. I think at some point, sort of mid part of the day, going into the close, you want to take a shot and put another short on. The levels I've been looking at, Friday's low in the 10-year was 125.18 plus. It's always kind of fun to sell against old lows. You could probably put a pretty good stop and a good risk reward at that point, and then look to cover down in the 124 handle tomorrow. I think we'll see some more liquidation of these long positions. Take a look at open interest, and all the treasuries and even the short end, big drops over the latter part of last week. I think people had bought the market in anticipation of a better response to QE2. The response obviously hasn't been so good in the credit markets, and people are liquidating those longs, and we expect more of that to happen. That's it for now. Hopefully you guys getting our comments in the chat. We'll keep you going throughout the day.